I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. FBI Director Christopher Wray is providing new details that call into question the White House timeline leading up to the departure of former Staff Secretary Rob Porter.
I would say that the background investigation process involves a fairly elaborate set of standards, guidelines, protocols, agreements, et cetera, that have been in place for 20 plus years. And I'm quite confident that in this particular instance, the FBI followed established protocols.
Porter left the administration following domestic abuse allegations from two ex-wives. A new U.S. intelligence report out today predicts Russia will meddle in this year's midterm elections. The World Economic Forum's Global Threats Report says it's likely Russia will try to interfere as it pursues bolder cyber operations and false information campaigns against America and its allies. A terrorist who set off bombs in New York and New Jersey in September of 2016 has been sentenced to multiple terms of life in prison. Ahmad Khan Rahimi injured 30 people when his bombs exploded in Manhattan's Chelsea neighborhood. Federal prosecutors say he has tried to radicalize fellow inmates. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and Bloomberg Technology is next.
I'm Emily Chang, and this is Bloomberg Technology. Coming up, the Bitcoin rally cools after a week of back-to-back gains. We'll check in on the latest digital currency struggle to maintain momentum and the current cryptocurrency landscape. Plus, Goldman's big tech bonanza. We'll hear from the CEOs of GoPro and FireEye and quiz him about the cyber attack that has already plagued the Olympics. And Blue Apron may finally have a recipe for winning. We'll break down its better-than-expected earnings scores and weigh in on new CEO Brad Dickerson's turnaround strategy. First to our lead. The recent Bitcoin gains we have seen the last few days has come to an end, snapping the longest rally since December. For more on what's going on in the crypto market, I'm joined by our editor-at-large, Corey Johnson. So, Corey, walk us through the day and where the momentum is going.
Well, we don't know who the buyers and sellers are, such as the nature of buying and selling. But I think what we've seen is a bounce off the bottom. You can see it from a sort of technical basis, whatever the heck that means. But the trading in these things were certainly in a free fall in cryptocurrencies across the board. And as we've talked about many times, they were all trading in lockstep with each other, despite the important differences between the different types of cryptocurrencies, all trading together, all kind of getting a bounce. But I think we've seen a little bit of a separation between the different kinds of currencies over the course of the last week. And you can see it in the pricing of those different cryptocurrencies.
Right, and talk about how the other cryptocurrencies are tracking relative to Bitcoin.
They've separated a little bit. I mean, yesterday you saw a big bounce in, for example, I think Ripple at one point was up over 20%. Bitcoin was up a fraction of that. Today you saw a turnaround together today, but I think that there's a little bit of a separation showing up in these.
What's driving that?
Well, who knows? I mean, the notion of speculation seems to be coming in the wind coming out of the sails. The steady stream of ICOs of companies rushing out to create new coins that seem to have no purpose, rhyme, or reason, except for the few that did. And I think that there's a growing recognition of what we've talked about, which is that some of these technological solutions actually have a purpose and a point. The others that are just a store of value or a way to speculate are looking more and more silly. And I think some of that speculative steam has been taken out of the market. We're starting to look at these companies as different from each other.
Meantime, Japan's CoinCheck, which had frozen withdrawals after that theft, started allowing them again. Quickly, $373 million was withdrawn. What do you make of that?
Well, I think that that was another thing. It's a notion that there's a greater fool out there, that if I could buy this thing, someone's going to buy it for more later, was broken by that problem of this notion of this currency that few had ever heard of before, losing hundreds of millions of dollars in value. And the idea that something like that could even have that kind of value, I think, comes as a surprise to a lot of other people. But the people involved in it must have known on some level that this thing that they were buying, they were only buying it so they could sell it to someone else. I also think it's kind of a failure of what we do as journalists sometimes, is talk, and I mean all of us in the community of journalists, not me and you, of course. But the talking about stocks as if they go up because they should go up, or they go down because they're going down, and not talking about intrinsic value, and not talking about the businesses that underlie them. That leads to speculation because it leads to people not knowing what they're doing and why they're buying things. And when we think about cryptocurrency as an investment, or we think about equity as an investment, or we think about debt as an investment, we need to understand what the underlying thing is that we're investing in, and then it starts to make sense what the price might actually be.
What do you think regulators are learning from fiascos like what we're seeing with CoinCheck?
Well, I think that we've heard different things, but I'm actually pleased to hear what I hear from some regulators, which is the notion that they're not all the same, and that regulation can protect investors from the shams and the crooks and let real companies flourish with a light hand where protections are needed and maybe regulations aren't.
All right, Corey Johnson, our editor-at-large. We're going to dig into regulation right now with Brad Garlinghouse, CEO of Ripple. Sticking with Bitcoin, we caught up with one of the biggest players in the digital currency market, Brad Garlinghouse, CEO of Ripple, from the Goldman Sachs Tech Conference. Ripple, of course, as we just discussed, has gone up and down with the market. Take a listen.
We've already seen the markets bounce back some. I don't follow it day to day, but the peak of the market, probably mid-January, the total asset class was about over $800 billion. It dropped down to maybe $300 billion, and I think today it's back to 450 or so. Now, that's a ton of volatility. My counsel for anyone following these markets is don't follow it day to day. If you believe this is fundamentally a movement that's changing the nature of a new asset class, then I think you should measure that over months and years, not day to day.
Ripple was doing really well at the end of last year. There's talk about it being the next Bitcoin. Is that like a benchmark for you?
Well, look, I don't think there's going to be one size fits all. I have publicly disclosed that I'm actually personally long Bitcoin. I think Bitcoin increasingly is digital gold, and it's a store of value. But Bitcoin isn't going to solve a payments problem. The time it takes to confirm a Bitcoin transaction on average is about 3 to 4 hours right now, and per transaction, the fees are around $15 per transaction. That's faster than SWIFT, but in contrast, XRP is 1,000 times faster and 1,000 times cheaper. So it's a fraction of a cent to confirm a transaction, and it takes 3 seconds to complete a transaction. So I look at Bitcoin as solving a different problem than what XRP is solving, and I don't think there's going to be one digital asset to rule them all. I think you're going to see multiple players have success in this market, and I think that's how the market's behaving, where you have kind of a little bit of quality rising to the top, and how the overall market caps have been trending. A
lot of the volatility is due to regulation, and presumably there will be more regulation. What are you expecting?
Well, I hope there's more regulation. I think if we want this whole asset class to grow up and mature, of course there should be regulation. And in fact, those that I think combat regulation, I think aren't really thinking about the benefit. The revolution of blockchain is not going to happen from outside the system. It's going to happen from within the system. And governments aren't going to go away, and banks aren't going to go away. And some in the Bitcoin community come from that kind of anarchistic, libertarian view. I think one of the reasons why Ripple has been very successful is because we're working with the system. We count the Bank of England as a customer. The Saudi Arabian Monetary Authority is a customer. So central banks are working with Ripple today. We expect that to continue in the future for sure.
What do you think the regulation should be?
Well, I think the regulation shouldn't change much. And what I mean by that is, when you're executing a transaction using Ripple's software, you're going through one regulated financial institution to another regulated financial institution. Your KYC requirements, which stands for Know Your Customer requirements, your AML, Anti-Money Laundering requirements, your BSA, Bank Secrecy Act requirements, that doesn't change because the bank is doing that on both ends. We're just making the plumbing much more efficient, much faster, much cheaper. And so from my point of view, the regulatory dynamics here, we should continue to have regulated financial systems. And when people, I think, are, oh my gosh, the regulatory is going to change, I think, well, XRP isn't circumventing any regulation, so I'm not that too concerned about it.
And what about what's happening in Asia? Does that concern you?
Well, the only thing that concerns me,
there.
I think the only thing that concerns me is that if we throw the baby out with the bathwater, and I think we really have to understand that not all digital assets are the same. We did a op-ed piece written by our chief compliance officer to kind of just talk about some of the differences. And you have some digital assets that are designed for anonymity. They're designed to circumvent regulation. You know, literally, I saw a founder of a company talking about his digital asset, and he's like, "Yeah, we're for drug dealers and people in tax evasion." Of course, there's going to be enforcement against that. That's crazy to me that he would, in a public setting, you know, say that. Yep. In contrast, XRP is working with central governments, it's working with central banks, it's working within the regulatory framework, and you certainly were embracing the fact there should be regulatory frameworks applied to the digital asset and crypto market.
So you just partnered with Lian?
Lian, that's one of the largest payment digital wallet payment companies in China.
So what does this mean, and what other partnerships to come?
Well, certainly we think about an interoperable world of all, whether it's banks, Lin Pay, the Paytms of the world, even the PayPals of the world, and we think about how do we enable interoperability and very low friction between them. We're going to continue to work with players across the world. I think if people understand Ripple's value proposition, our pipeline of partners and customers has certainly grown, and I'm excited to come back and keep you posted on those customer announcements. All
right, the year in Bitcoin, cryptocurrency 2018, what are you expecting?
Well, I think despite the volatility, I think you're going to continue to see a lot of bullish behavior.
But the volatility will continue.
The volatility will certainly continue. We're in the adolescent stage of developing a new asset class, and I think you're going to continue to see volatility.
My conversation there with Brad Garlinghouse, CEO of Ripple. Well, Apple CEO Tim Cook addressed shareholders Tuesday at the company's annual meeting. Among the issues discussed, a special dividend due to the tax overhaul and a slowdown in mobile payments. He also addressed succession plans, saying one of the most important roles as CEO is properly, quote, passing the baton to the next leader. Coming up, hackers took aim at the Winter Olympics. We sit down with the CEO of one of the companies on the front lines of cybersecurity and take stock of the dangers out in cyberspace. That is next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The CEO of Salesforce says a movement is coming at Facebook, and it won't be pretty. Speaking at the New York Times New Work Summit, Mark Benioff said Unilever's recent threat to pull ads from the social media giant is just the start of a growing backlash against Facebook. He also criticized Facebook's decision to dismiss human editors in favor of algorithms, saying, quote, that started the downward spiraling that they are in today. Well, the Winter Olympics are off to a roaring start, complete with medals and feel-good stories, and a cyber attack. The hack caused network communications to fail during the opening ceremonies, and while authorities have yet to name a suspect, it underscores the ever-increasing need for vigilance in the face of future attacks. Earlier, we sat down with Kevin Mandia, CEO of the cybersecurity firm FireEye, at the Goldman Sachs Technology Conference to talk about the hack and what threats he sees out there.
I've lived through about 4 different waves or phases of cybersecurity, and we're in the 4th. And what I mean by that is right now we have modern nations engaging in cyber operations, and there's just no rules of engagement. Nobody knows what the rules should be. What's off limits? What's fair game? How do you conduct espionage? And we just know espionage goes where the secrets are, and the secrets are on media right now. And also because there's no risk or repercussions to cyber operations, meaning it's hard to figure out who's doing it. A lot of times it's like a gray area. People don't know if they're doing the right or wrong things in cyberspace, but that's kind of the phase we're in right now. We're seeing a lot of attacks from nation states against nation states. I don't think the gloves have come off yet, but there's just different signals being sent.
It's interesting you casting it in this idea of right and wrong, given that there are attacks that are okay.
It depends on perspective, right? I mean, every nation wants to defend itself. Every nation wants to know other nations' secrets. So if you look at geopolitical conditions, there will always be espionage, there will always be some kind of ideological differences. So yeah, I think every nation is developing a modern capability for cyber operations, and we just haven't figured out as a global community how to operate.
So how would you describe threats from Russia versus China versus North Korea and how they have evolved?
Well, they're all different. They're all getting better, right? I mean, as the defenses get better, the offense has to get better.
So break it down for me.
So I will. The Russians are great at this, and they know how to be surreptitious and they know how to commit operations, but they cannot operate at the scale and scope that the Chinese do. The Chinese recently, especially in the United States, have been operating with some rules of engagement. They used to have a broad berth of targeting. They've narrowed the targeting, but they're a little more obvious. They don't do as much counter forensics, but they're often more widespread. North Korea, a little less predictable. They hack for multiple purposes. They hack to make money. They probably hack for espionage purposes, but they also hack to be destructive. And then if you look at other nations, we've even seen Vietnam get on the radar, and we've seen other nations start to do compromises. Iran is getting very big in cyber operations as well. So all of them have a different level of capability, different targeting, and different counter forensics and different fingerprints they leave behind.
Any insights into who's behind the hacks at the Olympic opening ceremony? There's speculation about Russia because they were banned for doping.
From right now, from the information that I've seen, I'm not sure who's behind it. We don't have attribution at FireEye just yet, but that's another example of any time you do a major event, there's no risk of repercussions to folks who attack it. So you have to do your physical security at these major events, but you also have to do your cybersecurity.
How is cybersecurity spending changing relative to last year, and what is the exposure of FireEye?
I haven't noticed a big change in spend. Right now, I do know if you're hacked and you know it, the impact and consequences seem higher than in the past, and I think it's gone up and to the right over the last decade. It used to be when you're hacked and you know it, it was a business problem, but it's gotten to be much larger now. So when you're hacked and you know it, the bottom line, consequences are growing. Therefore, you have more board attention, more CEO attention, and people are making sure that at least they get a good ROI on the spend they have in security.
This is a business that's becoming full of Me Too competitors. Have you seen any market correction from that?
I don't know if I have. I keep looking around. I go to the RSA conference every year, and I can't remember how many companies are there, but it's thousands of companies proclaiming to do cybersecurity, and it feels to me like there's only 10 or 11 ideas. So I question how much or how many companies the market can support, but thousands feels like a little bit too much to me.
So what does FireEye, how does FireEye stand out from all of these Me Too competitors?
We all say the same thing, but what makes us unique is there's a lot of companies that are pure product companies. We actually do our market research by responding to every breach that matters. So as we're on the front lines responding to these breaches, we have an amazing vantage point. How are attackers evading our technology? What is the threat intelligence, meaning who's attacking who, so you can assign risk in your industry. For example, hey, today there's a Russian attack group interested in attacking the energy grid or whatever it might be. You want to see those trends, and we see them on the front lines. We have nearly 1 million hours of frontline investigations every single year, and if you take that and put that into your products, we're finding the needle in the haystack every day with our people, and that's all software ever is automating human process, and I think we've developed the innovation cycle to do that.
Do you think we'll see more consolidation?
I think so. I think that's more likely than not, right? Again, you saw cybersecurity become a marketplace in the last decade, maybe even within the last 6 or 7 years. Thousands of companies have run into this marketplace. Not all of them are going to survive. There's going to be a lot of losers and some winners. So I think during that opportunity, there will be consolidation.
So what gets bought, who survives, who...
every company has their different strategies. I like to meet the founders and make sure that the genesis of a company makes sense. What they're doing aligns with their experiences, their passion. And there's a lot of companies that do make sense, but there's a lot that don't.
That was FireEye CEO Kevin Mandia speaking with us at the Goldman Sachs Tech Summit. Coming up, is Blue Apron finally delivering for investors? That is, we'll look at the company's better than expected financial results. That is next. This is Bloomberg. And the latest revolving door at Snap. Head of sales Jeff Lucas has announced he is leaving the social media company. Lucas joined Snapchat's parent from Viacom in 2016 and was crucial for building relationships with advertisers. He is the third leading executive to depart the company in the last 4 months. Snap also just lost its head of product in January and head of engineering in November. Snap says it won't be looking for a replacement for Lucas. The company's ad revenue now depends less on direct sales following a recent shift to automatic bidding. Blue Apron has struggled since it went public in June of last year, but could its year-end results mean the meal delivery company has ironed out some of the kinks? Shares jumped the most in 2 months on year-end sales that beat analyst estimates, and now new CEO Brad Dickerson is also predicting significantly narrower losses this year. So, is Blue Apron out of the woods yet? To answer that, let's bring in Bloomberg Tech's Garrett Tevink in New York. Garrett, I am guessing the answer is no, but why did the stock jump so much today?
Well, the stock jumped so much today because, they did beat analyst expectations on revenue as well as profit, but it was, which is of course a loss still, but it was more so the language that came out of the statement and then the call as well, where CEO Brad Dickerson took over in November to try to, patch up some of the major problems that they've had over the last year. The language he used was, words like stability and confidence. He said, a lot of the problems that they had over the last year have been taken care of. He said he was going to increase marketing spending, which is something that they cut heavily last year and kind of led to growth falling off a cliff as they were trying to get their ship back in order. So, we'll see what happens. The stock did jump in the early part of the day, but by the end of the day, it was pretty much back to where it was at the close before the earnings even came out. So analysts, after digesting it, kind of reading a few reports, said, okay, maybe things aren't as rosy as we initially thought in the morning.
What remains the biggest risk factor for this company?
The biggest risk here is that, competition from Amazon sort of overtakes them, of course, and when analysts asked Brad Dickerson that question, how do you kind of come out of the gate and face some of this heavy competition, not just from Amazon, but from other upstarts, HelloFresh being, one of the key names there as well. He said, well, we've got a lot of products coming out this year that will kind of change our offering and allow us to, charge more money and find more customers. And people said, okay, what are those products? He said, well, we don't quite want to talk about it yet. So that's sort of where some of this uncertainty comes from. They don't want to just be a meal kit company. They want to be a full consumer lifestyle brand, and we're still waiting to see what exactly that's going to look like.
So when you look at 2018, what are the main things that you are going to be watching?
Well, those products are going to be a key one. I mean, we'll have to see exactly what they roll out. I mean, they'll probably be talking about their product roadmap in the next few months. I mean, that could be anything from doing partnerships with other food or drink companies. It could be, doing, just kind of, you can think about it, they have this brand that's sort of very trying to be kind of cuisine forward, fresh forward, healthy for you, but also very easy to prepare. So anything in that realm, expect to look for that. And they're also going to be increasing their marketing and then sort of seeing where that goes from here. So the big thing is just really, now that they say they've kind of got this major growth issue out of control, or sort of in control now, what's kind of the next step?
So quickly, Blue Apron came up in an unexpected place, the White House budget. What happened there?
Right, so there, buried in the White House budget was this plan, sort of a combination between a couple government departments to do food delivery to people who at this point are getting food stamps. I'm not sure if that had anything to do with the stock up and down at Blue Apron. Obviously, they weren't necessarily specifically mentioned, more as an example of what the government wants to do. Anti-hunger activists and sort of poverty activists were very, confused by this statement from the government. It's sort of very early stages, but if it's any sort of measure, it's been tough for a private company such as Blue Apron to make this business model work. It will probably be tough for the government to do it as well.
All right, Bloomberg Tech's Garrett Tevink, thanks so much for that update on Blue Apron. Garrett, as always, thanks for joining us. Coming up, Goldman Sachs oversaw a record year for deal making in 2017 with more than $1 trillion worth of deals. We'll hear from the bank's co-head of investment banking, Greg Lemkow. That's next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. Senate Majority Leader Mitch McConnell says the time is now to address the plight of the Dreamers. McConnell today called on his colleagues to immediately submit any amendments they want considered in the debate on immigration.
Senators have had plenty of time to prepare. There's no reason why we should not reach a bipartisan solution this week. But to do this, we need to get the debate started, look past making political points, and focus on actually making law.
The White House is reportedly considering Federal Reserve Bank of Cleveland President Loretta Mester to be the vice chair of the nation's central bank. A person familiar with the matter says there's still no clear frontrunner, but Mester impressed the selection team. Israeli Prime Minister Benjamin Netanyahu today said police recommendations to indict him on corruption charges, quote, will end with nothing. Authorities say Netanyahu traded his influence for favors. Israel's attorney is considering whether to file charges against the sitting premier. South Africa's ruling African National Congress has decided to replace President Jacob Zuma, but the party set no time frame for handing over power. Zuma agreed to step down but wanted to stay in office for up to 6 months, which the party considers too long. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. here in Washington. It is 6:30 Wednesday morning in Hong Kong, already Valentine's Day, where we're joined by Bloomberg's David Ingles with a look at the markets. Happy Valentine's Day, David.
Happy Valentine's Day to you as well. I think, that really just means something if you do have plans. But in the absence of any sort of concrete and tangible things to look at there, then I guess that's just a greeting. We'll take it. We'll take it, Elisa. So we're looking at futures right now across the Asia-Pacific, 30 minutes to the open over in Sydney. Essentially, we're preparing to be unimpressed, right? We're stuck between a full trading day here in the Asia-Pacific and that U.S. inflation report that's due out Wednesday, of course, U.S. time. What that means for equities here, we're likely going to catch some gains, but those gains will likely be modest. We'll likely be looking at range-bound trade. I'm already seeing some hedges being put in at the moment just in case, of course, we do get an unexpected spike in inflation. Have a look at some of these currencies we're watching. Dollar-yen back below 108. So, again, to that point that we're getting some hedges coming in. We're also getting the growth numbers, by the way, coming through in Japan, Malaysia, and over in Singapore. Lots to consider today. I'm David Ingles here in Hong Kong. More from Bloomberg Technology next.
Bloomberg Technology. I'm Emily Chang. I want to return now to our coverage of the Goldman Sachs Technology Conference happening right now in the heart of San Francisco. Our Bloomberg Deals reporter Alex Barinka joins us now to talk about the current M&A landscape. Alex, take it away.
All right, thank you.
Thanks, Emily. I am here with Greg Lemkow. He is the co-head of the investment banking division here at Goldman Sachs. Greg, thank you for joining us.
Pleasure to be here.
As you oversee M&A, ECM, debt capital markets, we've had a lot of talk these past couple of weeks about the volatility in the market right now. In your capacity, overseeing deals, overseeing capital raise advisory for your clients, has that actually impacted decision making?
Well, it's interesting. So last week was a pretty interesting week in the markets, and I think it just goes to show that conventional wisdom is always wrong. If you'd gone back 2 weeks ago and asked somebody about volatility, they said, we'll never see it again, and then last week saw the highest amount in the VIX of all time. I think if it's contained to last week, which it seems like it has, as the market has settled down, the volatility will be okay and will be able to be contained. Volatility is generally not a friend of M&A and generally not a friend of transactions. But if what might be just kind of a one-time market correction of values being down 8 to 10%, and then stabilization in the markets and not continued volatility, I think we'll be fine.
And if you're a private equity firm sitting on the gobs of cash that they're sitting on, or a strategic looking to buy another company, I've got to think a bit of a valuation correction might be a welcome occurrence. Are you having those conversations with your clients?
Absolutely.
Right now?
And it's interesting. And I think, again, it's only 1 week, but if what happened last week ends up being values being 8 to 10% lower in a world that's awash in cash, and the mindset of sellers realizing for the first time in a number of years that things don't always only go up and to the right, I actually think it'll be quite conducive to M&A. I think you'll have sellers being a little bit more realistic and people with cash who've been sitting on the sidelines now seeing a little bit more value.
So talking about M&A, sticking on M&A, last year was about flat globally in terms of value of deals. What's your projection for 2018? Do we tick up above that $2.7 trillion in deals that we saw last year?
So I'd expect a meaningful pickup in M&A for 2018. Meaningful. quantify it how you want. But I think if you go back and you look at the overall M&A environment last year, we went into 2017 with a pretty robust outlook. You had, holding your politics aside, you had an election in the U.S. that felt like would come in with a pro-business agenda. You'd have corporate tax reform of some form. You'd have cash repatriation, and you'd have a more benign regulatory environment, all of which would point to great M&A. And so the beginning of last year, we had discussions with all of our big clients about doing landscape redefining transactions. And the one caveat was they all wanted to get some clarity on the regulatory picture and some clarity on what exactly the corporate tax reform would look like. And so they waited, and you saw a big lull in Q2, and they waited, and you saw a big lull in Q3, and they finally said, you know what, I'm kind of sick of waiting. It's gridlock as usual in Washington. We're just going to go back and do the activity we're going to go do. And in the fourth quarter of last year, you saw a meaningful pickup. You saw CVS merge with Aetna. You saw Fox merge with Disney. You saw Broadcom make its hostile attempt to acquire Qualcomm, all in the fourth quarter. And then in the background, you actually then did see clarity on tax reform, which was an accelerant for all of this. So you had meaningful pickup in M&A activity going into 2018. I think that environment is the mindset that corporate CEOs and boards are seeing, which is a pretty optimistic outlook for M&A.
On the tax reform point, we have had clarity on that. We do have this repatriation holiday. It does look a little bit different than it did back in the early 2000s when it happened. But if you look back then, a lot of companies spent that money on dividends, on buybacks. Is that capital allocation, is M&A going to win more of that capital allocation this year?
It feels that way, but it's hard to know. I think that's the dialogue going on in every boardroom right now, which is what are you going to do with the capital? What are you going to say to the street about what you're going to do with the capital, and are you going to telegraph it? And how much time do you have to make that decision before your shareholders force you to do something? And it's interesting because when we talk to our clients in anticipation of cash repatriation, I would say most of them said it's not going to make a difference. If we needed cash, we could always get it or borrow against our offshore cash. And just because we have it doesn't mean we're going to spend it. And having said that, now that it's back, I think they're all feeling some pressure to think about deploying it before shareholders say, I want you to give it back in the form of share repurchase or dividend. And so I think if there's likely to be M&A, it'll be near-term pickup on M&A as that cash gets repatriated.
When I also think about some of the things you mentioned that was gumming up the system in terms of uncertainty, the regulatory environment. There has been a lot of very pro-America talk out of the Trump administration. CFIUS and Chinese deals have been more in play in the conversations that I've heard about. Do you expect an increase in the China to U.S. investment or deal making in 2018? It fell off the map last year.
So it fell off the map last year for a bunch of reasons, partly the protectionism that we saw from the U.S. administration and partly from some of the issues around China not wanting so much cash to go offshore. I'm not sure you're going to see meaningful pickup in terms of pure M&A China to U.S. I think you may see more China to U.S. investment, minority investment. I think things that they think the regulators will approve. But the one big headwind, notwithstanding what we all expected to be a more benign regulatory environment, but the one big headwind to big M&A is regulatory. There's just so much uncertainty as to what deals will pass muster and which won't. And there's such a political overlay to the regulatory framework in the U.S. and in China in ways we haven't seen in a number of years.
So last year we did see Amazon buy Whole Foods. That really shook the industry, the grocery industry, and frankly the tech industry. In terms of transformative deals, grocery was in the eye of the beholder last year. Are there other areas that you think are ripe for disruption through M&A from tech companies in 2018?
What's interesting, the one other sector people speculate on is healthcare and see will there be disruption in healthcare and healthcare distribution around M&A. Unclear. The fascinating part about, for all the disruption that's taken place in technology, the technology firms have not been that active disrupting in M&A. Obviously, Amazon Whole Foods was the contra example to that. But if you look at the 6 largest market cap companies in the world right now, they're all technology companies. They're all $500 billion of market cap or greater. And they actually have not been that active participants in the M&A market. They've kind of grown organically. I think if that group of companies with their large market caps and their large cash balances come in via M&A to disrupt industries, we can see a massive shakeup.
And I can tell you, I will be watching those 6, and I'm sure you will probably be helping them get there. Greg Lemkow, thank you for joining us here at the Goldman Sachs Tech Conference. Emily, back to you.
Alex Barinka, our deals reporter at the Goldman Sachs Tech Conference, thank you so much. That is happening just down the street. I do have some new numbers now from Uber releasing their financial results. And it's good news for Uber. They brought in revenue of $1.4 billion in the fourth quarter of 2016. That has almost doubled in the fourth quarter of 2017 to $2.2 billion. They've also narrowed their losses considerably. The company lost $882 million in the fourth quarter of 2016. That's down to $475 million in the fourth quarter of last year. Okay, coming up, GoPro is out of the drone business. So what is next for the extreme adventure camera company? We will sit down with GoPro CEO Nick Woodman next. This is Bloomberg. YouTube CEO took shots at Facebook's attempt to build a rival video network. Speaking at Recode's media conference, Susan Wojcicki joked that Facebook should, quote, get back to baby pictures when asked if she was worried about competition from the social media giant. The jab comes as Facebook is doubling down on its newsfeed videos as well as its push into original content, Facebook Watch. Well, GoPro has recently gotten out of the drone business, but that hasn't dampened CEO and Chair Nick Woodman's optimism for his adventure camera company. He spoke with Bloomberg's Selena Wang at the Goldman Tech Conference in an exclusive interview about GoPro's new revenue streams and if his position on a partnership or acquisition has changed. Listen up.
No, it's still the same. My job as CEO of GoPro is to look for opportunities to realize our vision and create as big an opportunity for our investors as possible. And if that's as a standalone independent company, that's terrific. But if we can achieve that more easily and more quickly with a partner, we would jump at the chance to look at that opportunity.
So have any interested suitors reached out yet in terms of an acquisition or partnership?
No comment.
No comment. Well, if you end up changing your mind, do let us know. Now, according to a recent filing, your chief operating officer, CJ Prober, will be leaving the company, and he was someone that was supposed to turn around the business, and your head of corp dev will be leaving as well. So what explains all of this executive turnover?
Well, CJ was a terrific asset to the company, helped us build our software team, and was a part of the team that has been leading us to turnaround, and he's done a terrific job, and we thank him for that. But now that GoPro is even more focused in 2018 and moving forward on our camera, app, and cloud businesses, the scope of the job just got smaller, and in addition to becoming more focused with our product line, our management team is becoming more focused. We're a smaller, more focused business, and we've got a great leadership team that's capable of growing GoPro in 2018.
Well, talk to me about your efforts to attract and retain top talent.
Well, it starts with having a big enough vision and opportunity for people to come and grow their careers. GoPro is known as being a very innovative company, and we've been extremely innovative with our products and pioneering a new category and helping people capture and share themselves in new ways. But we also have to continue to innovate as a business and grow our business model in today's world, and that's something that we're starting to do with new programs like subscription. We shared that we're going to be growing the subscription part of our business in 2018 and moving forward, and it's initiatives like this that continue to excite, attract, and retain talent who want to come and help invent new business models and grow GoPro moving forward.
So we learned recently that the drone business will be shutting down, and that was something that investors were really excited about to sort of turn around the business and rejuvenate growth. So what can we expect in 2018 to be new revenue drivers for the business?
We have a lot of opportunity in our core business. To give you an example, we are spending roughly half the advertising dollars right now to sell approximately the same number of cameras we did year over year. So that tells you that GoPro's lineup is selling much more easily, and we see an opportunity to increase our advertising spend to significantly grow our business this year. We'll do that within our OPEX, our operating envelope of sub $400 million. So there's significant opportunity to grow GoPro's business even without our drone business.
And what about the software business? You talked a lot in the last earnings call about this Plus subscription service. So how meaningful will that be to revenue in the coming years?
Well, we hope that it'll become more and more meaningful. As we shared previously, we have 130,000 approximately paying subscribers. And we've only only really just turned on the marketing for our Plus subscription service. For the last year, we grew it rather quietly. We were in test mode for it. We found that we had a very strong free trial to paid conversion rate. We had very low churn rates, which told us that our customers really valued the service, and we think that they'll value it even more that we've dramatically increased the benefits but kept the price the same.
GoPro Chair and CEO Nick Woodman there, speaking exclusively with our very own Selena Wang at the Goldman Sachs Technology Conference. Well, Uber is betting on AR to ramp up user engagement. The online marketplace will begin rolling out new augmented reality features for shoppers and is exploring a credit program it hopes will encourage sellers to keep money on the platform. eBay had a strong holiday quarter with 170 million buyers and a 10% increase in gross merchandise volume. Coming up, talking about Uber's numbers, doubling revenue to nearly $2.2 billion. We're going to break it down with Eric Newcomer and Corey Johnson coming up. After one of the biggest cybersecurity attacks in history last year, Equifax has hired a new head of data security. Jamil Farchi will join the credit reporting company as Chief Information Security Officer and report directly to the CEO. He previously had a similar position at Home Depot. Let's get back to Uber now, just out with fresh numbers on its financial. Uber reporting it has narrowed its losses in the fourth quarter and is moving towards profitability. Our Bloomberg editor-at-large, Corey Johnson, here with more. Eric Newcomer is busy writing all of this up. So here are the numbers, Corey. Revenue in the fourth quarter of 2016, $1.4 billion. That is now up to $2.2 billion in the fourth quarter of last year. And also, losses significantly narrowing down from almost $900 million to almost $500 million.
It looks like the information got a scoop with those actual financials and full financials. And I think what we see here is a reduction in expenses, principally from according to the information, from reducing ad spending. And a lot of the ad spending was spent, interestingly, in apps, within apps. This is certainly a mobile-first company, and they spend ads that way, too. But spending less in terms of advertising, letting the service grow. And the result is, fundamentally, that the business is getting closer to profitability, which is to say it's still losing a vast and incredible amount of money every single quarter, every single minute. This is losing money. But what we know from information we received in the past is that Uber likes to talk about how successful they are on a city-by-city basis, or even in a domestic and a U.S. basis, with the notion that as they draw in more money from outside investors, that they will go into other locales and they'll have the same kind of success they've had in the U.S. The truth has been different than that. They've had great struggles in places like China, where they've sunk billions of dollars, but faced competition unlike what they face in the U.S. from Lyft and many others. And the result is the business has not been as profitable elsewhere. The new leadership of the company wants to change it, of course, as they inch towards an IPO. Now, they put that off for a while, but to getting closer, an IPO, as they've said, is their goal, and reducing losses and showing that revenue growth can continue is a big key to that.
I'm reading Eric Newcomer's analysis just coming in across the terminal. He's saying, look, Uber had a painful 2017, but the business managed to grow. It is interesting that Uber has decided to release this information, given that it's not a publicly traded company. What do you make of that?
Yeah, we'll see what the information, how much they release and how much they don't. But I think that they have so many shareholders, at a certain point they might even have to release, depending on your interpretation of SEC law, with a certain number of shareholders you're going to have to release certain information. The Job Act lowers that requirement, but with this high level of revenues, we'll see what they decide to give us. They also want to prime the pump for investors and get investors to have a notion of what this business is when the day comes that they want to sell this stock to the public. Let's also remember that there are a lot of insiders of the company selling shares as private shareholders to the secondary market of shareholders, and that's an important constituency for them as well.
Apple shareholders meeting also happening today, and Tim Cook addressing the issue of succession, with which I feel like he just took over. But, always an important question. Mark Gurman has a great piece out about the bench that Apple has. What do you make of how Tim Cook responded, saying, he's working on figuring out how to pass the baton.
I think it speaks more to the fact that we've been sitting in these chairs for a long time, coming up on 8 years.
Feels like just yesterday.
It was in fact about 7 years ago we launched a show in this room. The notion of what Tim Cook's going to do now, the Apple shareholder meeting is a very peculiar one. Shareholder meetings themselves are
quite the show.
They're an archaic thing from the past required by the SEC as a way for companies to actually address the people that own the company through public offers of shares. But they become this sort of comical thing of retirees and senior citizens showing up. But Apple's one is particularly unique because you still have people who have this passion about this company that they helped start in Silicon Valley, where the shareholders meeting continues to be held, because the people who really built that company remain shareholders in a lot of cases and feel like they have a very vested stake in the company, even though their shareholdings might be very small in what is now the largest company by market cap in the world.
Mark Gurman suggests that Jeff Williams, the current COO, would be the first in line if this were to happen anytime soon, but there are obviously no suggestions that Tim Cook is leaving in the near future.
Right. Mark would know better than I. Who knows? And I would say, and I love Mark. He has no idea either. I mean, I think what we've seen is that when these things come to the fore and they come to a vote, you don't know what's going to happen. The politics have always been intriguing with inside Cupertino's headquarters there for Apple, and I'm sure it'll be no different when Tim Cook decides to do that. But it's really important for a company. The more iconic the leader, the more important it is to have a bench together. And yet what we've seen from a lot of companies is they don't want the bench to be that obvious, because when times get tough, the board might be looking around for someone who's ready to jump in those shoes, and people can often get pushed out as that's about to happen. Things, I think, within Apple, they see that it's going swimmingly well, whether it's software development and the changes they're making there in the ways they develop software, or in the product releases. I think that they look at the fact that the iPhone, the most recent iPhone release of the 8 and the 10, was a higher revenue event than they've ever seen before, and that the company continues to grow to be bigger than it's ever been, even as it faces headwinds.
The market's turning in a relatively calm day after some wild swings, and Apple ending the day slightly up. All right, Corey Johnson, our editor at large. Thank you. That does it for this edition of Bloomberg Tech. On Wednesday, we're going to have a lot more from the Goldman Sachs Technology Conference. We'll be speaking with David Solomon, co-president and co-COO of Goldman, along with Sam Schenk, CEO of Hotel Tonight. And a reminder, we're live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.